Good evening, everyone. Time for another silver update. Now, this is the 4-hour chart of silver provided by netdania.com. You can see the sell-off that's going on right now, and this is the one that I predicted. You can see the support line here. They're gonna try to test it. You can see the selling volume that they did here to try to get to it. They're definitely trying to get through this. They did here back in, what was that? December 31st. But it looks like they're going to try it again. Now, you can see how much volume it took here to stop this latest rally that we had in March, or actually starting in February. You can see good rally, 19 past 22. But look at all the selling that came in. Think about this, these contracts here. 1.5 million contracts hit, or plus 1 million, we'll say. Contracts hit 1, 2, 3, 4, 5, 6, 20 times, something like that. Million contracts is what? 5,000 ounces a contract? 5 billion ounces each time. Silver that doesn't exist, that they're desperately trying to sell. Now, let's look at this story from Zero Hedge. We're going to spend the rest of the night talking about this. This is really insane. Before we do this, I want you to look at the chart of the Indian rupee, because that's what this article is about. Is that the one? Yeah. So that's the rupee, 2011 through the present, and you can see 44 to 60. Let's take it back a little bit farther. All the way down here, 32. So from 1996 to 2014, it lost half its value. Not nearly as dramatic as what we saw last night with the Ukrainian currency and with the Venezuelan or Argentine currency, but still, Indians who purchased gold all during these points, and a lot of these points here were government crackdowns where the price went up and then the government cracked down and the price went up, government cracked down, up again. The government's cracking down again. The people were right, the government's wrong. And this story is pretty shocking. This is on Zero Hedge. Peak smuggling. Indian has 12 gold bars removed from his stomach. While U.S. central bankers seem to believe that you can eat iPads, it seems one Indian fellow has taken the ongoing restrictions on gold imports, owning or transacting in India to a whole new level. As we have noted previously, have led to an epidemic of smuggling as Indians continue to hoard the precious metal. I don't know if they're hoarding it, they're just buying it. The only true source of financial security in their view, by any means possible. As the BBC reports, 12 bars of gold have been removed from the stomach of a 63-year-old businessman in the Indian capital of Delhi. The surgeon said he had never seen a case like this before, and customs officials were called and confiscated the gold. Now that is just crazy. It gives the story, and then we get some commentary here, and we have the government. There has been a several-fold increase in gold smuggling this year after restrictions from the government, which has left narcotics behind. In a sign of the times, whistleblowers who help bust illegal gold shipments can get a bigger reward in India than those who help catch cocaine and heroin smugglers. That suggests official data showing a sharp fall in gold buying, which has helped narrow India's current account gap, may significantly underestimate the real level of gold flows. Last week, Sri Lanka limited the amount of jewelry its residents can take out of the country, and it will try and monitor whether they bring it back. Pakistan banned all gold imports in August for a month as it believed Much of it was being smuggled on into India. Indian gold premiums have soared to $130 an ounce over London prices due to the supply crunch, compared with about $2 an ounce in Hong Kong, Singapore, and Thailand. In June, a passenger flying from Dubai was caught at New Delhi Airport with about 755 grams, 1.7 pounds, of solid gold staples painted gray. Officials stopped the man because the cardboard boxes he was carrying were stapled far more than seemed necessary. Simply genius. We're trying to plug all the loopholes. We have strengthened our anti-smuggling staff and installed door metal detectors, said SAS Nawaz, Deputy Commissioner of Customs in the South Indian city of Kochi. We're spending sleepless nights. Sleepless nights because citizens want to buy a piece of yellow metal. You might have bigger problems than gold, champ. In an effort to change that, Mumbai Customs offers a reward of up to 50,000 rupees per kilogram of gold bullion seized for informers in gold smuggling cases. Cocaine and heroin informers get only 40,000 rupees and 20,000 rupees respectively. So there's an example of the lunatics that run these governments. Of course, we know why they're doing it. It's obvious. It has nothing to do with their current account deficit. As Jimmy Rogers said in the past, the current account deficit of a country is caused by in other words, the trade deficit is caused by a budget deficit. If you have a government that prints more money than they can generate in taxes, and they make that up by printing money or borrowing money, that is what generates a trade deficit. That's why the United States has the largest trade deficit by far of any nation in the world, because it also has the largest budget deficit of any nation in the world. So it causes pressure on the currency. It has absolutely nothing to do with gold. This is a last stand by the bankers, and we're going to see here when we look at the article from Professor Fetti that they have to do this because if they don't, their system will collapse. And people determine what money is. That's the main point that you need to get from the professor, is that whatever people decide is money is money. So what's happening in India is the people know that gold is money, and they have already decided it's money, and they want money. They don't want fake government paper. So the government has to pass draconian laws outlawing people having money. That's what's happening. And it's starting to happen worldwide because governments are failing worldwide. Now let's read this interview with Professor Fetti. I don't agree with him on everything, but I certainly agree with him on a lot. And this is, it says Mircolas, I guess that's, I don't know, maybe February. I'm not sure, March, February. But it's this year, so it's recent. On Tal Fetti, the U.S. is the new falling Roman Empire. Exclusive interview. The Intelligentsia Financiera Global blog, Global Financial Intelligence blog, is pleased to present this exclusive interview with Professor Anatol E. Fetti. Professor Fetti, why did you decide to found the new Austrian School of Economics? Did you find something wrong with the old Austrian school? What about Karl Menger and Mises? What I have found was that post-Mises Austrian economists, but already Ludwig von Mises himself, had substantially deviated from Karl Menger's teachings for the worse. Thus, in my view, a rather large portion of the post-Mises Austrian economists' research is in error. We know you don't support both the Keynesian and monetarist theories. What's wrong with them? What's their biggest mistake, if any? The biggest mistake of Keynesianism and Friedman-style monetarism is that they favor the destabilization of the interest rate structure that was stable before, but had started gyrating and more recently plunging into the black hole of zero interest. We're seeing that. All this was in consequence of Keynes and Friedman's success in undermining and ultimately overthrowing the gold standard. Question: if these two theories are wrong, why do you think they have become the mainstream all around the world? Were they imposed by somebody? They became mainstream for reasons of their demagoguery. They are designed to appeal to one's sense of justice, antidote against misery amongst plenty. They take advantage of the appallingly low level of education based as it is on envy. It is characterized by an almost complete neglect of the a prioristic branches of science, i.e. logic, mathematics, and economics. And I say this as a professional mathematician. Keynes ensnared F.D. Roosevelt. Friedman ensnared Nixon. These two presidents were happy to trample upon the United States Constitution at their bidding. As a consequence, the gold standard was destroyed and irredeemable currency was foisted upon American citizens in 1933 and on every inhabitant of the earth in 1971. At the same time, the gold of the people was looted by the government. Question: can authentic capitalism thrive under a fiat monetary system which is based on exponentially growing debt? Obviously not. Signs that the grand experiment with global irredeemable currency is an unmitigated failure are all around us. Question: is the so-called welfare state legitimate under capitalism, or is it a sort of socialism? The welfare state is a shameless Ponzi scheme whereby costs are kicked upstairs and charged to future generations. It is a scheme to enslave the unborn. The fact that the electorate allowed itself to be conned into accepting it is indicative of the extremely low level of education in the world. It does not even deserve to be called education. A more accurate term would be training future serfs. By contrast, socialism is not a con scheme. It has been embraced by some highly intelligent people who allowed their actions to be guided by their compassion and emotions rather than by their intellect and cold reasoning. I would have to disagree with Good Professor on that. I think a lot of the socialists and Marxists knew exactly what they were doing. There was a saying in Germany during the last decade of the 19th century that went like this, quote, if you are in your 20s and not a socialist, then you have no heart. But if you're in your 40s and still a socialist, then you have no brains. Question: if our monetary system is doomed, should we return to sound money by using gold and silver coins once more? How could we have practical and renewed gold standard? The transition is simpler than most people think. There is no need to challenge the authority of the Fed. That would be futile anyhow, nor is there need to wave the red cloth of a gold standard in front of the paper bowl. It would suffice if one jurisdiction, see that, just one jurisdiction, just one. If one jurisdiction, e.g. the UK with its gold sovereign, or Switzerland with its gold Vrenli, or France with its gold Napoleon, or Hong Kong with its gold Panda, opened its mint to gold and silver. In more detail, if one jurisdiction guaranteed that the mint would stay open for the unlimited coinage of gold and silver through thick and thin, in particular, if it would mint all the gold brought to it regardless of quantity, then the problem were largely solved. Gold mines from all over the world would flock to the mint and deliver their output in exchange for gold bills payable in the standard coin in 91 days, the time it takes to refine the metal and strike coins. That's interesting. I didn't know that. Interesting that we have the 90-day T-bill, and that is the time it takes to refine the metal and strike coins. The gold mines, in turn, would auction off their gold bills to the highest bidder, to the party offering the lowest discount from face value. In this way, a credible gold discount rate would be established that is not rigged by central banks and the banking establishment. There is a huge latent demand for these gold bills, since for the past 80 years the world has been forcibly deprived of the possibility of exchanging cash gold for gold income. The great insurance companies and pension funds would scramble to get these gold bills, as they presently have no good assets to cover their mounting liabilities. But so would also the great trading houses financing world trade in food, fuel, and fodder, because the petrodollar is showing fatigue at a highly dangerous level and could collapse under stress at any time. The jockeying of other currencies to step into the shoes of the petrodollar is in vain. They cannot compete with the gold bill. They can only engage in petty currency wars. Likewise, silver producers would draw silver bills on the mint and auction them off at the silver discount rate, thus providing alternative financing for trade in other staple products. This would be tantamount to the remonetization of silver that would recapitalize the world economy with its capital in a shambles. It would be an incredible reversal of history. The beauty of the plan is there is no need to storm and invade the Fed headquarters on Constitution Avenue to throw the rascals out. The Fed can go on with its mindless inundation of the world with paper dollars. Once its monopoly is broken, the decision to choose the currency lies with the people. Let the people decide whether they want paper money or whether they want gold coins in exchange for their goods and services. If Congress is unwilling or unable to restore the monetary clauses of the Constitution, and if the executive and judiciary branches fail to do their duty in protecting the country from the ravages of currency debasement by the Fed usurping unlimited power, then the people should take the law into their own hands. They can do it by coining their gold and silver at whichever mint they can. So, very interesting question about silver being demonetized in the 19th century. Silver was demonetized in the 19th century and gold 100 years later. Do you think it was a premeditated attack? Could it be part of a long-term plan to pave the way to fiat money? It took me a long time to find the answer to that question. The silver standard has fallen victim to a conspiracy of two upstart states: the Union, victorious in the Civil War against the Confederacy, and the newborn German Reich, victorious in the Franco-Prussian War against France. You just have to ask the question, cui bono, who benefits? Of course, conspiracy theories are notoriously hard to prove, but then they're just as hard to disprove. The culprit was a secret consortium of 19th century multinational banking houses operating with the connivance of the victorious governments. The consortium accepted the discipline of a gold standard temporarily. Having successfully sabotaged the silver standard, it was more confident that it would be in due course be able also successful in sabotaging the gold standard. Lo and behold, that's exactly what they did in the intervening 100 years. And it goes on into Menger and Mises, etc. Brilliant man, brilliant man. Don't agree with him 100%, but brilliant man. His major point you need to take away is that the people have the power. It's just like the Wizard of Oz. We know that they were silver slippers. We know that this was about a return to the silver standard, and there's a lot of symbolism there. I'm not going to go into it. I've done it before. But Dorothy had the power to return the whole time with her. The people have the power to return to sound money. All it takes is for the people to buy it. That's why this war is occurring in India between the government of India and the people of India. But if all the people around the world started buying gold and silver, all the people of the various countries started buying physical gold and silver, there's absolutely nothing that they can do. And I do believe that very, very soon here, that one of the sovereign nations, if not a group of sovereign nations, are going to put out a new gold-backed currency or gold-backed bills or something like that, as he suggests. And I think that when that happens, probably a five-fold move initially would be in order. Certainly for silver, I don't know, 6,000, 7,000 gold, maybe not, maybe double or triple for gold. But definitely if things turned that way, we would have major moves up. But right now, we've got, I think, probably the last attack. I think they're going to try the big washout here. The chart just, it really has had that look for the last week or two. I've really started noticing it, that it seems to be forming up one of those bottom test formations. Let's get out a little bit farther so you can see what I'm talking about here. It just has that very bearish look to it. Just the choppiness in here, the way it has been tested. And I showed you before the volume of how they came in very, very hard to stop this rise and continued to sell off until finally it gave way, selling billions and billions and billions of ounces of paper silver. So I'm looking for a very good but very quick buying opportunity here. If we get down to below 18, it's theoretically possible that we may get that 15 test, although I don't think that 15 is going to last probably more than, if it comes more than maybe one night, and we would be rapidly back up to 19 probably in a very short time. But that would be the time to grab as much as you can, and we'll talk to you next time.